Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about PRINX CHENGSHAN Holdings Limited annual report. PRINX CHENGSHAN Holdings Limited is a diversified company that offers a wide range of products and services. At its core, the company specializes in designing, manufacturing, and selling tires under various brand names such as PRINX, CHENGSHAN, Austin, and Fortune. These tires cater to different types of vehicles, including medium/long-distance transportation, buses, light trucks, passenger vehicles, and agricultural vehicles. In addition to tire production, the company also engages in the development and trading of goods made from rubber and synthetic materials. This includes research and development of tire technology and equipment, as well as provision of related technical services. Furthermore, PRINX CHENGSHAN Holdings Limited offers tire rental services and trades inflatable products. The company operates globally through a network of domestic and international distributors, automobile manufacturers, and private label customers in various regions including mainland China, Asia, the United States, Africa, and the Middle East. With its extensive product line and global reach, PRINX CHENGSHAN Holdings Limited is well-positioned to meet the diverse needs of its customers. The company's history dates back to 1976, when it was founded as PRINX CHENGSHAN, Cayman, Holding Limited. It later changed its name to PRINX CHENGSHAN Holdings Limited in June 2021 and remains a subsidiary of CHENGSHAN Group Co., Limited. PRINX CHENGSHAN Holdings Limited maintains a market capitalization of $5 billion, broadly in line with the industry peer group. PRINX CHENGSHAN Holdings Limited trades at a lower price-to-earnings ratio of 4 times, and a lower price-to-book ratio of 0.62 times relative within the industry. This suggests a potential market detachment, as PRINX CHENGSHAN Holdings Limited trades at discounted levels, while the broader industry remains fairly valued, warranting deeper fundamental analysis. The company maintains a moderate leverage profile, with liabilities making up 39% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 6.24%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. On the growth side, several key factors contribute to an increase in revenue. One notable driver is the expansion of global operations, which enables companies to tap into new markets and increase their sales presence worldwide. Additionally, investments in research and development (R&D) capabilities also play a significant role in driving revenue growth. The growing demand for new energy vehicles, driven by government policies emphasizing environmental protection and sustainable development, has led to an increase in vehicle ownership in the People's Republic of China, PRC. This trend is expected to continue, contributing to revenue growth. Furthermore, sales of specific tire products, such as semi-steel radial tires, have shown significant increases. On the other hand, several factors contribute to a decline in revenue. The imposition of North American reciprocal tariffs has led to an increase in cost of sales, resulting in a decrease in profit before income tax by approximately 13.7% year-on-year. This, combined with fluctuations in global economy and exchange rate changes, has negatively impacted revenue growth. The sales of certain tire products have also declined, such as scrap tires, which saw a significant drop in sales from 2024 to 2025. However, it is worth noting that some companies, like PRINX CHENGSHAN Holdings Limited, have managed to maintain revenue growth through the provision of tire rental services and trading of tire products. Net income and profit margins decline. A summary: the net income of the company decreased by 17.1% year-over-year, from RMB 329.7 million to RMB 137.8 million. This decline is also reflected in a decrease of RMB 192 million in net income. The profit margins suffered even more, with a drop of 3.1 percentage points in gross profit margin and 2.8 percentage points in net profit margin. The reasons behind this decline are multifaceted. Periodic fluctuations in profitability metrics have contributed to the decrease. Additionally, fluctuations in raw material prices and U.S. tariff policies have had a significant impact on the company's bottom line. Furthermore, the increase in cost of sales due to North American reciprocal tariffs has also played a role in the decline of profit margins. The cumulative effect of these factors has resulted in a 17% year-over-year decrease in profit margins. This trend is concerning and requires attention from management to mitigate its impact on future profitability. The company's financial performance indicates a positive trend in its operating cash flow. The net cash inflow from operating activities for 2 consecutive years was $1,201,152 and $1,250,208, respectively. Furthermore, the net operating cash flow for 2025 is reported to be $1,945,501, which is a significant positive result. However, there appears to be an inconsistency in the data provided on page 156, where it is stated that net operating cash flow was negative. This discrepancy can be attributed to errors or inaccuracies in the reporting. Nevertheless, the overall picture painted by the company's financial statements suggests that it is indeed generating positive operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past few years. Initially, total borrowings decreased by 9.6% from 2024 to 2025, indicating a reduction in debt. However, this trend was reversed as of December 31, 2025, when the total debt level increased to RMB 946,020, compared to RMB 809,846 in 2024. In terms of interest expenses, there has been a substantial decrease. Interest expenses decreased by RMB 50,983 from 2023 to 2024, and further reduced by RMB 108 in 2025 compared to 2024. Additionally, interest expense on bank borrowings decreased by RMB 39,488 from 2023 to 2024. The overall trend indicates a significant decrease in interest expenses, with the company's interest expenses decreasing from RMB 2677 to 0 as of December 31, 2025. The slight increase in debt level from 2024 to 2025 is not consistent with the overall trend of decreasing interest expenses. This discrepancy may be due to various factors such as changes in borrowing rates or repayment schedules. Nevertheless, the company's efforts to reduce its interest expenses are evident, and this trend is expected to continue in the future. The company's performance across various segments and regions has been mixed, with some areas showing significant growth while others struggled due to external factors. In terms of specific segments, the advanced tire manufacturing segment performed well. Within the commercial vehicle tire OE market, both all-steel radial tires and semi-steel radial tires experienced year-on-year increases of 6.3% and 9.8%, respectively. This indicates a strong demand for these products in the market. The domestic segment also showed positive results, with revenue reaching RMB 7,279,661 and profit standing at RMB 1,149,437. The overseas segment, however, had lower revenue of RMB 4,527,140 and profit of RMB 988,350. On the other hand, some regions struggled due to external factors. PRINX Thailand was impacted by anti-dumping duties in the U.S., while China, PRC, faced similar challenges since 2019. These issues have likely had a negative impact on the company's performance in these areas. Management is outlining a comprehensive vision for the company's future, anchored on a century-long blueprint. The key focus areas include industrial upgrading, global expansion, technological innovation, and product enhancement to improve competitiveness and resilience. To achieve this, the company plans to establish a second overseas production base in Malaysia, diversify its production footprint, and enhance supply chain management efficiency. The strategy also emphasizes high-standard compliance and high-quality industrial development. This involves strengthening diversified market and supply chain strategies, increasing local language-speaking personnel in management teams of overseas subsidiaries, and optimizing product structure to increase high-value-added products. By prioritizing these areas, the company aims to mitigate uncertainties caused by fluctuations in raw material prices, logistics delays, and environmental regulations. Overall, the company's outlook is centered on accelerating growth through strategic investments, innovation, and operational improvements. This approach is expected to enhance its competitiveness, improve product quality and service levels, and drive long-term success. The company has made significant investments in its operations through acquisitions. One notable example is the Shandong OTR project, which involved a total investment of RM$0.11 billion. This acquisition aimed to increase production capacity, with plans to manufacture 84,000 high-performance engineering radial tires and 10,000 giant engineering radial tires per year. In contrast, the company has also engaged in divestitures, where it sold off a substantial portion of its assets. Specifically, 29.3 million tires were sold as part of this process. This move suggests that the company is streamlining its operations and focusing on core areas of business. That concludes the financial summary for PRINX CHENGSHAN Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.